He's talked about tax cuts in the US. If he does deliver those tax cuts, I think that's going to see American growth come through, and therefore the Federal Reserve's probably not going to reduce interest rates as much as they otherwise have would. If he doesn't control the legislature, I think he'll probably move faster on his tariff agenda. He's been clear that he wants to increase tariffs, 60% on Chinese products and 10% on everyone else. That is also inflationary because it's going to push up prices for Americans and therefore also could impact domestic interest rates in the US. I don't think that's going to impact Australian interest rates in the near term. If the Reserve Bank here in Australia reduces rates, and we're expecting that to happen in February or March of next year, that will be because we've seen inflation come into line for, trim mean around 2.5 percentage points, and that's what the Reserve Bank governor is looking for. So I think, near term, I don't think the US election is going to impact us. What might happen, however, is later on in the year or possibly into 2026, if the global economy is growing faster, it is possible that interest rates here won't go down as much as they otherwise would have.
We saw your margins in your lending book come under pressure again, even as you saw lending grow below system bank average. How do you square that?
Well, this is primarily in our home lending business in our personal bank. And so it is clear that especially earlier in the year, pricing for home loans was really, really thin as different players were fighting hard for customers and customer growth. We decided as a bank to pull back a little bit in terms of our pricing. And so we did grow lower than system. That was a deliberate decision. But it's still the case that even with that, margins were still lower than they have been historically for us as well as for other banks, and that's why our margins in our personal bank and the earnings that we had in our personal bank reduced. What is, I think, positive for us is that if we look half on half, the personal bank's earnings actually increased. So most of the pressure that you're talking about we saw in the first half of the year. So we'll hopefully be in a better place going into fiscal 25.
Does that mean when the RBA starts cutting, you won't lower mortgage rates in line with the RBA's cuts in order to improve margins?
Margins tend to be dependent on what you pay depositors and then what you get from your borrowers. So, typically we will follow up or down what happens with the Reserve Bank. And then it's just the difference between what we pay depositors and what we get from borrowers that drives our margins. And those have been coming under more and more pressure over the last few years as competition in Australian banking has increased.
And in terms of that competition, obviously very competitive in the home loan market, is that one of the reasons that you've advocated for the serviceability buffer at 3% imposed by APRA to be reduced for first home borrowers?
No, the narrative there was around the fact that housing is a big issue, that we talk about a housing crisis in this country. What we need are more dwellings for people to live in. The Australian dream is to own a home. And we also want to be a destination of choice for migrants to come to Australia and build their lives here. We need migrants because we need more workers. So here the big issue is supply. We need more dwellings being constructed, and we've been advocating as a bank for easier and more frictionless planning permission so that it's easier for developers and builders to build dwellings. We've also been advocating for more migrants with construction skills and trades to come to Australia. Now, on the margin, if we do those supply side changes, we are also of the view that some tweaking on the demand side could be helpful for first-time home buyers, people who've been students, for example, to get on the housing ladder. But it's really important for the narrative that we don't forget that supply is 9/10 of the problem here.
It would also benefit banks like you if there were more home borrowers in the pool, though, wouldn't it?
Look, we want to help people to achieve their dreams of home ownership. And to the extent that we can do that safely and responsibly, we'd like to.
Now, in terms of bad loans for the bank, they did rise to 1.39% of your lending book, a 2020 high. How much more pain do you think there is to come?
We think Australia is probably at the toughest point of the economic cycle right now. I might point to our requests for hardship assistance from our customers. Those doubled over the course of 2024, but they promisingly peaked in the June-July timeframe. Since then, we've seen them plateau and actually start to come down. So I'm of the view that that might be a promising signal that we're at the toughest point in the cycle. Homeowners are showing that they can manage the different calls on their monthly budget, and they're getting through things, even though it's hard. And then if we do get the interest rate reductions that I was alluding to in February or March, I'm optimistic that there's light at the end of the tunnel here, and that next year will be more positive for Australian households.
What are you seeing happening with the stage 3 tax cuts? Is that are consumers spending them, or are you seeing them being saved, put on the home loan?
Right now, we're actually seeing them being saved by and large. Obviously, that's a generalization, and some customers and consumers will be using it to get through the monthly budget. But by and large, we are seeing most households saving those tax cuts for a rainy day.
And you, of course, are still the country's biggest business lender. Where are you seeing the most pain in the business sector?
Yeah, there's a number of different drivers. I think regionally, you're seeing Southeast Australia struggle a little bit more than perhaps states that are more resource intensive, like WA, Queensland, and Northern Territory. So, that New South Wales, Victoria corridor. And then within that, you're also seeing businesses that maybe are more exposed to domestic consumption and discretionary spending. As household budgets have tightened, people are having to choose what they buy and what they don't buy. And so if you're in the business of providing discretionary goods and services, some customers are choosing to not buy those at this point in time, and therefore some businesses are struggling.
There's quite a bit of competition in the business banking sector at the moment. CBA is one name that springs to mind. Are you worried about losing the title as Australia's biggest banking lender?
Look, we've been in a business banking space for a very long period of time. We have over 6,000 frontline business bankers across 600 locations in the country. We have grown our loan balances by 8 percentage points over the course of the year. That's very strong growth, and we're optimistic that we're going to continue to be the nation's biggest and favourite business bank for a long time to come.
Andrew Irvine, thank you so much.
Thank you for having me on the show.